one of the biggest names in housing data says U.S. home prices growth has slowed to near zero in some cities. But underneath the surface, some markets are still very strong, while others are slipping. All right, we've recently covered Q1 housing market reports from the National Association of Realtors, as well as Realtor.com. You can listen to that in previous episodes, most recently just a week or two ago. Now let's turn to another heavyweight in housing data, one of my favorites to follow. They were formerly known as CoreLogic. Everybody knows them as CoreLogic, but they recently changed their identity to Cotality. And if you want to know, in my opinion, what lenders, what institutional investors, analysts, and serious market watchers pay attention to, this is one of the names that I think matters the most. Their latest Q1 2026 housing update gives us a very powerful look at where prices, where risk, and opportunities may be heading next in the real estate market. All right, so why does Cotality, formerly known as CoreLogic, why do they matter? Well, they're considered one of the most trusted names in housing analytics because here's what they track. They track millions of public property records. They track mortgage data. They track closed sales, tax records, foreclosure and delinquency data, repeat sales, home price trends, valuation models. Their information, it's very, very extensive, and it's used by banks and mortgage lenders, investors, realtors, appraisers, even other media outlets, and as well as big-time institutions. This is a large-scale, real housing data that you're going to get from these guys. This is not guesswork, folks. This is really, really good stuff that they put together. All right, let's go over their main findings here in Q1. Now, this is their update. It's a year-over-year update from last year, Q1. This report came out within the first week of April, and it's measuring from April of 2025. So this is year-over-year data. Okay, what did they find? First of all, let's look at national home price growth. So it's slowing. They found it slowing to about 0.5% per year over year. Now that's a 0.5% gain year over year. So, it's up, it's positive, but it's not great. And, a typical national housing market that's actually healthy usually sees anywhere from 3 to 5% annual appreciation over time. At 0.5%, quite frankly, we're well below that range. And it shows you we're in really a slowdown phase. Now, that's a national number, and we're going to break it down a little bit more by region. But the point is prices are still rising nationally, but barely. All right, 13 states were negative, but they only named the 3 worst in the report. So Cotality said, essentially, 13 states or jurisdictions posted negative annual price growth, but in the public report, what they specified were only the 3 weakest. So what they listed as the weakest metro, well, the first one's kind of like a metro. It's not really a state, but really it's states. These are the worst. Number 1 was, and you may have guessed it from what I said, Washington, D.C., at down 3.01%, followed by Florida, down 2.3%. And at number 3, this surprised me a little bit, Montana, down 1.52%. Those were the 3 worst states or jurisdictions. Basically, according, from Q1 last year to Q1 this year. So year over year, according to Cotality, those are your 3 worst. Now, the worst performing major metros, I think it's interesting because, these were kind of, at least Florida, it was one of those, for sure, post-pandemic boom markets, and now it's definitely softening. Now, Cotality also highlighted the weakest performing metro areas. So let's get a little bit more granular here. And they only talked about two as far as percentage-wise, and their worst metro. Year-over-year data from last year Q1 till now, Cape Coral, Fort Myers, down 6.5% year-over-year, followed by number 2, Austin, Texas, down 5% year-over-year. If you're not familiar with Cape Coral, Fort Myers, they're referring to the west coast of Florida. It's a region there, and they lumped together Cape Coral, which is a smaller town near Fort Myers. Fort Myers is the larger metro, but they lumped them together and said they are down 6.5% from last year. It's a pretty big drop. And Austin, Texas, also down 5%. Now, there's a few honorable mentions, but Cotality did not provide percentages, but they did say Tampa and San Antonio also were among the softer markets year over year. And again, I mean, what's the theme here? We're talking about major post-pandemic era winners. They had rapid price growth. Migration demand was high, a lot of investor activity. But now there's some of the softest markets. So what you had is, some of the hottest housing markets of 2021 now becoming some of the weakest markets in 2026. So where were things stronger? What locations were stronger? Well, the Northeast and the Midwest. Cotality said that a lot of these overlooked states were among some of the best performers nationally, and they ranked 4 of them, and these were percentage gains. And number 1 was New Jersey. New Jersey had a 4.2% year-over-year gain as far as housing values, home values. Connecticut was up 4%, Rhode Island was up 3.8%, and Wisconsin was up 3.8%. Again, these type of markets didn't go any. I wouldn't call it. They had the boom sort of bust, that you saw in Florida and Texas and some of these other areas, but they are quietly outperforming some of those Sunbelt areas and even out in the West. So there's your positives. All right, many major markets they claimed were still very overvalued. This was another very interesting part of the report. Cotality said 70% of the top 100 metro areas remained overvalued. That's down from 83% a year earlier. So that's good in that it's less than before. 70%, are still, 70% still overvalued, but 83% a year earlier. So at least things are maybe getting a little bit less overvalued, I guess is how I'd read into that. By overvalued, what they mean is, home values running way ahead of local incomes, affordability, and historical pricing norms as they determine it. And they didn't rank them in the report, but they mentioned markets that were stretched and overvalued being Miami, San Diego, Los Angeles, and Phoenix. Where I think we agree markets have slowed down quite a bit. All right, what's the big picture here? So when I read this data, I see 2 things going on here. I see 2 different housing markets going on nationally. And they're almost taking 2 different tracks. I see one track, affordable markets with tighter supply, and they're staying strong, such as those areas we talked about in the Northeast and the Midwest. Then I see this other track, and where you have these older, call them the boomtown markets that really took off, right, during or after the pandemic. And now they're seeing softer pricing, and they're dealing with more inventory. And that's those parts of Florida, Texas, and even Washington, D.C. Investors take note because you got more negotiating power in some of those cities. You should have better selection, And if you're looking to sell properties, you got to price correctly in those areas, right? Buyers are definitely more selective, and you can't overprice for sure. All right, so we got plenty of interesting dynamics going on in today's housing market. Very interesting how different it can be from one region to the other. Cotality's Q1 report tells me we got a market overall nationally losing momentum, but it's splitting up regionally, and it's becoming much more selective and unique based upon just where in the U.S. we're talking about. Before we end today's show, stop what you're doing and subscribe right now to Real Estate Market Minute Plus. Listen to all episodes ad-free. Get exclusive bonus episodes and content, and help support the show's growth, longevity, and future improvements. Go to realestatemarketminute.supercast.com right now. You can also find the link in this episode's show description. Check it out. I know you'll love it. That is it for me today. Thank you so much for listening to today's show. And as always, if you have questions or need specific advice, ideas, or just some help regarding your particular real estate needs or situation, or if you're just looking to buy or sell real estate in Florida, well then DM me on Instagram at the Salib Group, or just send me an email to mark@thesalibgroup.com. Don't forget to leave a rating for the show, follow, subscribe, help others find the show, and be informed and educated about the real estate market just like you. Until next time.